Okay, so you've had a meal, and you've digested hopefully the blockchain talk, and you're going to notice my tone is going to change. Obviously, this is it is a far out topic. Blockchain was just tech, so that was sort of politically neutral. It's just a new tool. But this really does represent something fundamental, something that is, as I said, a societal change, level change. And it is a bit hard to get your mind around it, but when you start thinking about it, given that we're living in this digital world and this money system that we have today, what's called a fiat money system, is relatively new, a bit of an experiment itself, only about 45 years or so old. What all we're doing when we propose something like Bitcoin is we're saying, how about we go back to the way things were, but in a digital form. So I'm going to be talking about money now and trying to show you why people like myself really are taking this very seriously. And we'll show you how, I'll sort of take you on a journey through what's going on in the world and where we've come from and the promise that this has. And hopefully after this, you'll leave here thinking seriously about this topic, not just looking at those high returns that you might have earned if you had bought in a Bitcoin or two a year ago. But take it seriously. This is it is a difficult thing to try and sell, especially if you're comfortable with the status quo and the way things are, and you don't like change. Obviously, this is going to be something that grates you a little bit. But if you are dynamic and innovative and interested in making sure that the world doesn't leave you behind, then this is something that's worth considering. Okay, and it's not just me who's saying this. Again, I've been involved. I first found Bitcoin about 6 years ago, and was amazed by it. And then only 2 years ago, the world kind of started talking about blockchain, and now it looks like we're pivoting back into Bitcoin. And Bitcoin is becoming a subject of relevance. So let me try and take you on this journey and see if I can bring you to where I am right now. Okay, all right. Okay, so this is going to be a bit more like school, in fact, because I want to now take you into the workings of Bitcoin. I know I told you about this distributed database, but I want to now show it to you in your terms. You all deal with ledgers, and you all deal with spreadsheets, and you all deal with money. So I want to now draw this picture in a way that you can understand. So it's going to be a little bit like school, but hang in there, and at the end of it, you're going to be enlightened and excited, I hope. Okay. So, all right, so the outline is just going to be the history, motivation, how it works, and why it's important. So if you want to know where we're going to go and how this is going to look, this is what it's going to be. All right, but first things first, I'm sure you've heard that Bitcoin is a digital currency. That's not actually true. If you use bank accounts and use credit cards and debit cards, you've been using a digital currency all this time. Digital just means that you don't transact with paper or coins. So Bitcoin, although it is a digital currency, it's not correctly termed a digital currency, nor is it a virtual currency. Now, even our Reserve Bank has got a paper out on virtual currencies, but virtual currencies, all they are currencies that operate within some kind of closed ecosystem. So if you think about games have currencies. Like Warcraft has gold, and millions of other games have their own little in-game currency. The thing about that kind of currency is that it works well within the environment or the ecosystem, but it doesn't work very well out of it. I can't promise to pay you with Warcraft Gold or Second Life Lindens. Or e-bucks. E-bucks is a virtual currency, I guess. It's something that has value, and you can trade within the e-bucks ecosystem. But it's not going to work if you want to go and buy something from a partner, a person who's not part of that partnership. So the correct word when you talk about Bitcoin is going to be cryptocurrency. Now, I don't want to talk jargon here. I'm not going to talk about cryptography and networking and all those confusing things. As I said, I want to make this a discussion about what it means for you and in terms you understand. So the only word I will use right now is crypto. Because if you want to sound impressive at cocktail parties, you can say, no, Bitcoin's a cryptocurrency. And all it stands for is cryptography. Now, cryptography isn't new either. Cryptography has been around for forever. Ever since there have been digital networks and banks. Banks use cryptography. The military use cryptography. So all we have now is a new kind of currency. It's digital, but it's not virtual. It can actually work with anybody. You don't have to be somebody who signed up for it. You don't have to be a partner in Bitcoin. And it's a new kind of digital currency, a cryptocurrency, a currency that is secured with cryptography. Okay, and that's the only time I'm going to now use jargon with you. Okay, but it's because I want you to be able to be impressive at cocktail parties. Okay, so let's now look at the way the world works currently. If we are a bank, all right, what we have is we've got a database, and in that database we've got records of our customers. So we've got accounts, and those accounts have balances. And every time you want to make a transaction, what happens is you go to the bank and you say, please could you now debit value from my bank account, and can you please go and credit value in another person's account? And if it's a different bank, then that bank has their own ledger or their own database. And what they do then is they update their information. So if you understand this, then you're actually halfway there to understanding how Bitcoin works. All right. Now, for a long time, there have been people who've been trying to figure out how can we create, instead of having these ledgers that operate in this way, where you have an entity like a bank, and what you want to do when you want to transact is you have to ask that bank to transact on your behalf. Wouldn't it be nice if we could have a different sort of system? Now, you know that when you go to a retailer, let's say you want to go pay something online, or you go to a merchant, then what you do is you go and hand over your credit card information. But now there's not money flying from that credit card into the merchant's account. What actually happens there is that all you're doing is you're sending an instruction to the bank who owns your bank account and saying, I'm authorizing a transaction. I need to now move value from my bank account into the merchant's bank account. Okay, and that is how we transact today. But for decades, literally, people have been trying to figure out how to now create a different sort of system where there isn't a bank that's sitting there holding value on behalf of somebody else. Instead of that, imagine if you could have digital cash. In other words, something that you hold on your person, if you actually are in physical possession of it, much like you do have rands in your wallet, physical notes and coins. People have been trying to figure out, researchers and economists have been trying to figure out, how can we create a digital cash token, which means that those people can own it, they can control it, and if they want to, they can send it out to somebody if they're making a payment. So here we have now the situation where there can be an issuer. So let's say a central bank decides to issue a cash token. And this is, again, the question earlier on was, what is the Reserve Bank thinking about? What are all Reserve Bank thinking about? They're thinking about this, how to create a digital cash token. And then you can now, in a peer-to-peer way, instead of having to go via some intermediary, actually go and send your cash token to the recipient. Now, this has been ongoing for decades. People have been trying to figure this out, and there were a number of attempts, lots of companies, but they all fell afoul of regulations, or the technology didn't work very well. But this has been a problem that's been worked on for a long time. So actually, it's been inevitable that we eventually came up with a solution that acted like this. And the only difference is that it doesn't work precisely like this. Bitcoin doesn't work like this. Bitcoin isn't a token that you now are going to receive from somebody and then you can store it in your own digital wallet and you can send it from peer to peer. Bitcoin works very much like a bank where there is a ledger, but remember I told you that ledger now is a blockchain, and that's decentralized and nobody actually controls or governs it. And what you can do is you can now transact using that ledger. So if we think about the system that we have now, here's our ledger. We don't have our bank account anymore. We don't have a bank governing that. Instead, what we have now are all these volunteers around the world that are now hosting a copy of that ledger. So now can you see there's no one person that's involved or controlling that ledger. That ledger is distributed and now decentralized around the world. And those volunteers, they're not just doing this for, to be nice. What they do is, by processing these transactions, so every time you process a transaction at a bank, they've got a server that's running and it's now doing some processing and some calculation. These computers out there, these volunteers, they are going to be processing transactions on our behalf. And to do that, they want to be rewarded and incentivized. And so the way Bitcoin works is that every time one of these computers out there that process a transaction actually do the job of doing a processing a transaction, or what we call a group of transactions, or a block of transactions, then what happens is they get rewarded a new currency that comes into the system. So if you've ever heard about this concept of mining, Bitcoin mining, making Bitcoin out of thin air, that's actually what it is. It's now all these volunteers, these computers processing transactions, and every time they get to process a transaction, then they're going to be earning money in return. Okay, either they're going to get fees, which are actually built into the transaction. They're going to get the fees, and they're going to get new Bitcoins that get created. So if you understand that whole system, then you've pretty much understood how the Bitcoin system works. So there's now this guy, let's say that computer processed some transactions. He earned 12.5 Bitcoins. This is an amount that changes over time. And eventually what happens is that reward, every time a computer processes a transaction, gets halved, and then a few years later gets halved, a few years later gets halved, until we reach 0 rewards for processing transactions. And the only way that those volunteers can earn money is by earning the fees on the transaction. So it becomes a self-sufficient, self-regulating system. But a very important concept is that what we're going to do ultimately one day is reach the limit of number of new Bitcoins that can be created in the system. We have a finite supply that's going to be reached one day in about 120 or so years. Now that sounds far out. I'll quickly tell you a story about being things that are far out. I said to Meryl in a tea break, I told my sons, I've got 4 of them, that in 5 billion years' time, the sun is going to turn into a red dwarf and consume the earth. And they're all horrified, that this notion can actually happen. But 5.5 billion years is a long time. Anyway, 120 years seems like a long time, but it's inevitable. It will happen. We will eventually reach the finite supply of Bitcoins. But now this is the process. We now have a distributed, decentralized ledger, and every time you want to now go and transact, what you're going to be doing is you're going to be sending a transaction message out to these guys. One of them is going to pick it up and process it, and by doing you that favor, they're going to earn money. Okay. But the most important word, again, is decentralization. Can you see that nobody is governing or controlling the system? It's self-regulating. And that's why we can now have confidence that, okay, sure, we now can see that the system is running. And if you want to go and opt into the system and buy into the system, literally, well, then you can be confident that no one's ever going to come along and change the rules. And, for example, if we think about banks, the way banks operate, when you give a bank your deposit money, you're not actually depositing it, you're loaning it to the bank, and bad times can happen, and banks can do stuff with your money. So here we have now a system where nobody controls those rules. There's no human being that now can come and introduce some arbitrary rule that will mess with the system. This system is fixed, it's decentralized. Most important word that there is. So let's just quickly look at that ledger again. How is it structured? Well, what we have, this is just generally what it looks like. You've got a sender, and that's an account number. Here I've just got some addresses, what are our addresses. You have a receiver, and you have an amount. Now, the way Bitcoin works is that these transactions are all grouped together in blocks every 10 minutes or so, and then they get processed, and then added and updates, and they update the ledger itself. 10 minutes goes by, and another group of transactions gets processed. Can you see now what we've got is we've now got blocks chained together. There's your blockchain. So remember I told you that that's all it is, and that's what a blockchain is. So now you can literally go into people and say, I understand it 100%. Be sure to add blockchain now to your LinkedIn profile as a skill. Okay, so now what we have is actually incredible. If we think about the cloud, the cloud is always, we hear about the cloud, and it's this big amorphous thing, but really a cloud isn't very special, it's just hosted servers. But what blockchain has given us, and the Bitcoin blockchain has given us a true cloud, where there's no location that, where your information is stored. 99.999% of these machines can go down, and if there's one computer on the network that's still up, Bitcoin is working, the blockchain is working. So it's truly distributed and decentralized. It's a real cloud. This is, for the first time, a real cloud. But more than that, it's become a big public resource. So now anybody, without permission, if you follow the rules, can now go and create an address on the Bitcoin blockchain. You can now send funds, you can receive funds. Anybody can do it. You can be an individual or you can be an organization. So we now have this public resource. It's kind of like the internet. If you want to build a website on the internet, you don't have to ask anybody's permission. If you've got a server, you can just hook it up to the internet, right? And now you're live. That's what the promise of the internet was, to be able to democratize information where anybody can have a voice. But we know what happened. The internet sort of ended up in these big silos, Google search and Facebook social networks. But here we now have a true public resource that anybody can use. And just a few weeks ago, I read in the news about our correspondent banking issues around the world. South African banks are now not being in trouble or whatever it is. But now this is essentially a big public foreign exchange platform. If you have funds in this country, you can now tap into this resource and you can now go and move money literally around the world, and you don't need to have any relationships with anybody. It's available. So it's really incredible. For the first time in history, we have this system that it's almost like this creature that now has been born, or Pandora's box, and it can never be shut. No one can ever shut down Bitcoin. It's available for us to use. So if this doesn't give you confidence, at least it must give you inspiration and make you feel like, wow, this is something truly unique. Something that has given us the ability now, without permission, without filling in forms, to be able to transact on this big public resource. But now, what I want to do is try and convince you that it's worth those values or those bitcoins. And remember, there is no actual physical thing as a bitcoin. A bitcoin is just an entry in a ledger. It just says, if my account number is 1001, it just says 50. And now I have 50 numbers, and we'll call them bitcoins. And if I want to send you 10, I can just now deduct 10 from my balance and give you 10. So there's no tokens flying around. It's just this big ledger in the sky that's recording these transactions and moving amounts from one person to another. Quite incredible. But then why should you now consider those numbers as valuable? Why should you consider one of those numbers to be worth, 14,500 Rand now? Where did that value come from? A lot of times people have asked me, what's backing Bitcoin? Where does it come? There's no government backing it. I know our fiat rands actually don't have any intrinsic value, but we sort of, it's backed by our faith and confidence that the government can run the country properly and can tax its citizens and not hyperinflate its currency. But what's backing Bitcoin, and why are people now essentially moving out of Bitcoin? Sorry, I forgot to mention that if you want to now access money on an account, you do need a very important thing, which is called, it's like a password, it's called your private key. So all that does is give you access to your account. And if you, that's the only thing you have in your possession. You don't actually have, if I have 10 bitcoins in this country, the government can't come to me and say, okay, those 10 bitcoins are now in South Africa, now it's in our jurisdiction, we want to be able to tax it. Bitcoins don't exist in any country. They exist around the entire world. There is no jurisdiction where these things exist. But you do own your key. That is the one thing that you do have in your possession, and that unlocks value on that blockchain, and now you can transact. And if you lose that private key, it's kind of like you losing your PIN to your credit card or whatever. Somebody can take that private key and steal all your money. So that's the one thing that you should look after. But there's no location. There's no geolocation where this database exists or these coins exist. If you have 1,000 bitcoins, you have 1,000 bitcoins in the world. You don't have them in South Africa. So actually, the whole notion of moving money in Bitcoin from South Africa to China makes no sense whatsoever, because it never does move from one to the other. All it says when you do that is saying, okay, Lorien, who owns this key, who is currently located in South Africa, moved 1,000 bitcoins to this address over here, and the person who owns that key is currently located in China. But you can travel around the world, it doesn't make a difference. There's no locality where this stuff exists, except your private key. So why are people now deciding to do this? Move out of rands or dollars, taking their hard-earned rands and now pushing them into these numbers, these bitcoins that exist in the cloud. And what's the motivation? And this is now where we start kind of going down the rabbit hole. We have to think about not just the way kids think. One of the important things about something like Bitcoin is that it actually fits very well with the way young people are today. I mean, I remember, I'm 40 now, but I remember clearly playing computer games and thinking it was very valuable. If I would play for several hours, I'd earn some kind of game currency. That had value for me. I could do whatever with it. This is how the world is. This is how kids are now today. The holding digital assets that can have tangible value. That is a common notion for young people today. Maybe for all of us who are a bit older, it doesn't make sense. But this whole idea of gamification, if you are earning credits or you're earning points or you're earning this, those things are all worth something if they can be translated into something else. If you can take your air miles, for example, and actually turn them into flights. So what we have now is we have this kind of global digital loyalty point or a token that is like a game, a digital token that represents real world value. So this is not so alien for this generation, the generation that's here. Having a digital token that represents value, easy. I mean, that's no problem. I'm convinced. My son, by the way, is turning 2 today. And I can be sure that he will never want or even think about using rands. Or by the time he's old enough, he's going to be quite confident, quite happy to think that this token, which represents value, is considered a real asset, a real money. But it's deeper than that, and this now we're going to talk about a lot of big macro trends. The world is changing, and there are lots of issues in the world, lots of problems. And it's being reflected in the price of Bitcoin. There's a lot of uncertainty, and I want to now just highlight some of those points. Now, I'm an independent person. I'm not a part of a banking system. I'm not part of any of that, so I can speak freely about what's going on. But I know that a lot of things that I mention now, especially when I've addressed the Reserve Bank, and I have done repeatedly multiple times, and I talk like this, which I'm about to, I get a lot of kind of squints, and a lot of people think I'm crazy. But I'm not going to be, I'm going to be talking about real things here that are real concerns, real issues that are making people think seriously about hedging against that uncertainty or looking at an alternative, something that cannot be, compromised or manipulated. So let's go and have a look at that survey. But the first thing I'm going to do is talk about the positive trends. What is drawing people towards Bitcoin as a store of value? And there are a number of them, and I'm just going to give you a few, but the more you think about it, the more you can find. So the first thing is that Bitcoin actually has a lot of properties of money. Now, I don't know if you've ever thought about what makes money, but it's actually quite simple. There's a number of things that make something a good form of money, and throughout history we've had all sorts of monies. We've had shells and pepper and sticks and whatever. There's all these things that have been money at some point in history. And if you look at what makes is similar between them, you'll notice that one of the most important properties of money is that it's a medium of exchange. If you want to go and buy something with someone, you want to be able to carry something that is easy to be carried, and you can hand over, a medium of exchange. There are other things that have been valuable throughout history, but they haven't been a good medium of exchange, like a cow, for example. It's valuable, but it's not easy to lug around with you. So it hasn't been good money, although it is valuable. Another one of them is a store of value. Now, a store of value is very interesting when you think about what makes something a good store of value. And all that is how limited something is. If something is common, it's less valuable than something that is rare. So if you are somebody who likes rare antiques or something that's unique, that you are a collector, then you understand what I'm talking about. But these two things, properties of money and properties of gold. Also, another property about money is that it must be divisible, it must be durable, it must be fungible. You know what fungible means? It means exchangeable. If you have a rand in your pocket and I have a rand and yours is newer and shinier, it doesn't make any difference. It's fungible. We can swap and we settled. Okay. But why has gold been the perfect form of money for so many thousands of years, literally? Because of that store of value, that's limited supply, as well as all the fact that it's all those things that make something good money. The fact that gold is very durable. You can drop a gold coin at the bottom of the ocean for 100 years and it'll still emerge all shiny and new. It is divisible. If you want to buy something that's worth half an ounce, you can just melt it down. Diamonds are not good form of money because a R1 million diamond cut in half is not 200,000 or 500,000 rand diamonds. Also, diamonds aren't fungible because one diamond, even if they weigh the same, one might be shinier or color, the color might be different, or it might have a flaw in it in some respect. So diamonds have not been a good form of money. But Bitcoin is actually very much like these two things. It's a medium of exchange. Oh, and another one is a unit of account. A unit of account is the way you measure the value of something. So if you think of the centimeter, that's a unit of measure. This is 1 centimeter, that's 2 centimeters. Now I know this is longer. Gold is a good unit of account because this is worth half an ounce and this is worth 1 ounce. Now I know that this is more valuable. Rands are actually a good unit of account because it's numeric. Okay, it's a piece of paper, but all it is a number. This is worth 10, that's worth 20. Bitcoin, what is it? It's a number. So it's a good unit of account. So can you see all these properties that we apply and we attribute to money, what makes something good money, is attributable to Bitcoin. But the properties of gold, meaning that it has a finite supply, gives it that extra special quality of a store of value. Okay. Now I know that the price has been volatile. We're going to look at the volatility of that price, and there are very easy to understand reasons for that. But at least Bitcoin has the same properties as money. So sure, maybe it's going to take some convincing before we all put all our life savings into it. But at least we can be sure that it definitely ticks all the boxes when we start evaluating something as money, okay, and as gold. Now I talked about the millennials and down. This is the world that they are familiar with. I read a survey saying that millennials would rather go to the dentist than stand in a bank queue. That's why all these fintechs are doing so well. Because fintechs are focusing on the customer, focusing on young people, know that they are on mobile and social networking. And this fits very well with that. This kind of unique, fun, interesting, novel, modern thing that's outside of that stuffy world of banking with tall buildings and suits and ties and all that. So we cannot disregard them. Millennials and down are they the next generation, and they will be defining the way the world works. So given that Bitcoin does very well as money, and that it's unique and novel, is a driving factor into why people are getting into it. And also, there's a lot of services now coming up in terms of Bitcoin. If you want to buy and sell Bitcoin, just about, in so many countries, even South Africa, I think we've got 4 exchanges. It's 4 exchanges now, and Luno is the best one, the one that I trust more than the others. But right now, if I want to go and buy a Bitcoin, no problem. I can just go onto the exchange. I can EFT some cash, find somebody who wants to buy. It's an exchange, so just post an offer or a buy order, whatever, and suddenly I can have Bitcoin. So it's becoming very easy nowadays to have Bitcoin and to get Bitcoin. The way I first got Bitcoin, I can tell you that story later, but it was a huge mission, and there were no exchanges in those days. So the fact that these services are coming up, and now my own business is doing this sort of thing. I'll explain it more later. Do you know that the New York Stock Exchange has just listed a Bitcoin investment trust, and now there's an ETF that's coming along by the guys who didn't actually start Facebook, but the Winklevoss twins. They had that issue with Mark Zuckerberg, and anyway, they got to have this Bitcoin ETF that they're trying to launch. So now it's becoming easier for more mainstream investors who don't understand Bitcoin and don't know what's going on. Now you can easily go and just buy into an ETF, and suddenly now you're invested in Bitcoin. So now can you see how it's growing up? It's not just for people who are enthusiasts or techies or geeks or youngsters or whatever. It's now reached that world. So those things are happening. Now, a very important thing, I chuck it in here, but it's the idea of programmability. Now, all that means is that Bitcoin is software. It's something that you can write software, and you can use it to do things like smart contracts, and you can now programmatically make payments. You don't have to integrate into a banking system to issue payment instructions. You can literally, in your software program, have access to Bitcoins, and then you can code up anything you imagine, and you can now make payments. Now, I know that if you're not a software engineer or someone like that, that might seem a little bit far out there, but that is incredible strength. And I've spent years, integrating into payment gateways and doing all that, and it's a huge pain. And now it's so easy. If I want to now write a little app that just makes payments, or make a game even. And there are games that exist now, even on Facebook. I think it's on Facebook, but there are games that instead of earning some virtual currency in the game, you can actually earn Bitcoins, and the game pays out. There's casinos as well doing that. And then another important thing is, now this is for merchants, and also for consumers. If I go pay with my credit card, what am I doing? I'm handing over my sensitive information. I'm saying, here's my credit card information. It's like giving them my wallet. Please take what I owe you. Don't lose the credit card information. Also, from a merchant perspective, if I give my credit card online, the merchant has to be convinced that I am the person who owns that credit card, or else what's going to happen? There's going to be a chargeback. That's all because credit cards are pool payments. What's happening is somebody's reaching into my credit card and pulling money out. And as soon as that happens, suddenly I have recourse. I can say, no, I didn't authorize that, or that's not allowed. I want my money back. And now, fees and insurance and all that has to be built into the system. Bitcoin is push. If I want to pay you, I physically have to take my money and hand it over to you. Now, no one can deny, if I have that key which says that I own that money, if I hand you that Bitcoin, nobody can say, listen, I didn't take that, I was given it. So for merchants, this is great because it eliminates that whole issue of having the chargeback fraud. All right. So very important aspect about Bitcoin, being a push payment. So it's non-disputable. And it's peer-to-peer. Again, if I'm sending money to somebody, I'm not going through an intermediary that's taking fees or delays or anything like that. That money goes from my Bitcoin account directly to your Bitcoin account. And you can be anywhere in the world and it makes no difference. There's no geographic location where these exist. And it introduces an incredible amount of security and efficiencies in the system. It's a global platform. It's everywhere and anywhere. And the merchant acceptance thing is now growing and growing. Now, I have another company called Centbee, which is working to try and make sure that one day when you go to Woolworths, you can pay with Bitcoin. Or if you don't want to go to an online exchange because it's too complicated, you can go into Checkers and you can buy a prepaid card with Bitcoin in it and you can scan it into your phone and you can now have Bitcoin with cash. So I am trying to do all these things, and I'm not the only one. There's other companies around the world all trying to make it easy for you to use it and spend it and get it. And because of those types of businesses, you're going to start seeing it more and more, and it's going to become easier and easier to use. And suddenly now, it's not just going to be this complicated thing that you need to have a computer science degree to understand. Now it's going to be something that my gran, if she ever wants to, can go and transact with Bitcoin. So given all these things, and there are many of there are others that are now making Bitcoin much more attractive, much more user-friendly, much more likely to be able to be useful. The ability now to pay for my groceries or pay for my rent or pay for my energy. And this is another thing that I did, another claim to fame, built the first prepaid vending system for electricity with Bitcoin. So you can now be anywhere in the world and you can go and top up somebody's electricity meter with Bitcoin. So can you see how these services now are just making it so much easier? It's like the internet. I remember, again, in the 90s, I had an email account being a computer science student at Rhodes, but my friends didn't. So I was saying, you've got to use email. It's amazing. I can send information. Their question, how do I get the internets? How do I use, where do I plug in? What do I do? Given now that email is on your phone and you don't have to be studying computer science, same thing. You can now one day, in fact, Bitcoin wallets exist. I hope all of you guys are starting to right now download a Bitcoin wallet. But given this, it's making it easier and simpler and much more useful to actually go and use it, and all these other things that are going on. So can you see how there's something going on? I mean, if you weren't aware of any of these things, does it feel like the ground is kind of shifting a little? Okay, this is all happening. And given a year or two, it's going to be, when we go into a store and they don't accept Bitcoin, you're going to be surprised. You're like, these guys are losers. Okay, this is, by the way, what it looks like. Have you ever used SnapScan? Well, that's exactly how you go with Bitcoin. Instead of snap scanning, or whatever, you can now go pay with Bitcoin. And so I'm going to make sure that this happens for you guys. Okay, I'm doing it for you. All right. Okay, now the question is, okay, fine. Now I've told you why Bitcoin is cool and interesting and useful, and you should get into it. But actually, there's much more than that. I mean, that was the pull factor. But now there is a lot more serious things going on in the world outside of Bitcoin that are pushing people into something like this, where people are feeling the urgency and the need to get out of the existing financial system. Whatever option it is, what do I, give me an alternative and I'll take it. And I'm going to now go through those. In fact, I'm going to just splash them all onto the screen and I'm going to talk about each one of these things. So the first thing is negative interest rates. Can you believe such a thing exists? Where a third of global bonds are now have negative interest rates. Some banks are imposing negative interest rates on savings. Great if you want to borrow money, and that's the whole point of negative interest rates, so we can get more money to be borrowed. But if you have savings in bank accounts now, it's more worth your while to take your money out, put it into the mattress. So people are now, this is one of the issues that are happening around the world. I mean, this is unprecedented. Never happened before in history, a negative interest rate. It was crazy enough being on zero interest rate policy, but now we have this negative interest rate policy, and it's really unsettling a lot of people. And they're thinking, okay, hang on, I'm not getting anything for my savings. What can I put my money into at least so I don't get negative interest rates? And that's why gold, I think, is going to become another asset that you're going to start seeing. The price is going to go up and more demand is going to happen because of this one. Bank bail-ins, that happened in Cyprus. Some banks now in Europe and around the world have actual rules to say if the bank gets into trouble that they are allowed to bail in. In other words, take a cut of the money to give your account a haircut. This is another issue that's happening, and we saw this a few years ago when Cyprus was having all its bail-ins, and then the price of Bitcoin started going up, not necessarily because Cypriots were buying Bitcoin, but just because the world thought this is a crazy situation. If your money's not safe in a bank, then what should we do? And the price of Bitcoin went up. Hyperinflation is actually a very real issue. Now, there are charts that you can go and find. If you just go and look on the Reserve Bank, the Federal Reserve, or if you look at even, there's a very good site, it's called invest. I just forgot now. I'll remember it. But what you can do is you can go and see the money supply of every country in the world, and they are all having this exponential curve. Since 2008, when we had the US had their financial crisis. Did you ever hear of quantitative easing? All that meant was suddenly all this money started getting printed, and the price. If you just look at the inflation rate. There was an exponential inflation in the supply of money, and it's not just the US, it's every country that you look at, even South Africa, and it looks exactly like the rate of inflation that Zimbabwe went through up prior to 2008. So hyperinflation is coming. It just doesn't feel like it yet, I guess, because of the currency wars that are going on, competitive devaluation. Also, the US dollar being the world reserve currency gets to inflate export all that inflation. So hyperinflation is an issue, and we see that happening in Zimbabwe. We saw it in Zimbabwe, but we see it in Venezuela, and we see it in other countries. And you know that Zimbabwe wasn't just the only one. There have been 57 cases of hyperinflation in the last 100 years. So given a currency system where you can just go and print as much as you like, and that's what the system we have today, where it's not linked to gold, it's not actually linked to anything, it's just paper at the end of the day, or digits in a computer program. It's very attractive from a central bank point of view, a government point of view, to print money, and that's what's been happening over the last decade or so, and that is going to mean that our currencies are devaluing. Then there's the war on cash. The India famously a few months ago, was it? Demonetized 80% of the cash in India. But demonetization, in other words, removing notes from circulation, is actually a trend. Australia is talking about eliminating a $100 note. I think it's the $100, and same with the US. Sweden is practically a cashless society. If you are spending money, physical cash in Sweden, you're considered, that you're a shady character. So the fact that people now can't even use cash. It means now suddenly you're going to have to be trapped into a system where there's going to be fees and there's going to be all sorts of obligations on you, and people don't want that. So it's just another trend that is happening where people want freedom and are going to want some kind of alternative where they are not forced into a banking system. And then geopolitical uncertainty and risk. There's just so much a danger, it seems, in the world today. If you just think about the Middle East ongoing, with Syria, and there's a lot of people who just feel, frankly, that things are unsafe. So what do we do? Do we stay with our currencies, or do we think about some other asset that we can hedge against all this uncertainty? And again, gold and silver, I think, are going to come back, and we're going to remember that gold and silver are money, real money, intrinsically valuable money, because for the last 45 years, all of us, I guess, in this room have been cultured to think that gold isn't money anymore. But even now, Greenspan, I've been noticing, he first in the 60s, he was all about gold, and one of his famous quotes was that Gold protects you against inflation. Then he was suddenly the chairman of the Federal Reserve, liked his money printing again. But now that he's off that and he's not part of the administration anymore, that's what Ben Bernanke said. Remember, the Federal Reserve is supposed to be independent of government, but Ben Bernanke admitted that he was part of the administration. That's why he did what he did. Even Greenspan right now is saying he's all going gold bug again and talking about how gold is going to protect you against what's coming, this inflation that's coming. So can you see how the trends are shifting? Out of this fiat money experiment, which is now seeming to be falling apart, and we're moving back into what's called the sound money system. We're not moving there now, but people are now thinking more in terms of that. And if Bitcoin has the same properties as sound money, being finite in supply and all those other things, well, now in this digital era, this digital world, we now have an alternative. In fact, a lot of people say, I prefer gold because it's physical and tangible, and it just makes me comfortable. And Bitcoin doesn't have that. But actually, that's a feature that Bitcoin has on top of gold. You know, gold is physical, which makes it less useful as a medium of exchange in this digital world. Bitcoin is exactly like gold, but now it's digital. So it's actually better than gold. It has an extra feature on top of it. Also the unbanked. 80% of Africans are unbanked. They're not going to get banked. They mistrust banks, and also they just might not just, it's not a business case or whatever it is to get them. And so, but they want to transact in an e-commerce economy. They want to transact efficiently. Cash is expensive and inconvenient and insecure. So this is now a potentially a good tool for them to be able to do that, to be able to now have a mobile device and suddenly now be able to receive funds electronically and send funds electronically, especially remittance. If you send money from South Africa to Malawi, I think you're going to pay 20% with Western Union or MoneyGram. Imagine now you could now send your money, if you're Zimbabwean and you're sending it back to Zim, your 1,000 Rand or whatever it is, you're not going to have to pay $200 as a remittance cost. You're now going to pay, 5 Rand or whatever it is that it costs. So, and a very important notion as well. So can you see how, given all the positive aspects about Bitcoin and the way the world thinks about it and how useful it's becoming, given all these things, now you might attribute levels of severity to this in your own way, but these are notions that people are feeling. If you just do research and if you just do a survey of how people are feeling, these things come up all the time. Maybe some of these you aren't bothered by, but it certainly bothers some segment of the population, and they want to find an alternative to the system. Now, the alternative in Bitcoin, of course, isn't as good as what we have in terms of Visa and MasterCard and SWIFT and all that. But it is an alternative. It is a hedge against the uncertainty. It's some way that you can protect yourself against all these things that might concern you, even if it's just one of them. So those are the things that are going on. This is why we're now in this very important shift, the societal shift. It's almost like a civilization thing where we were on a system and we're moving off it. And again, the system, it's not like since the beginning of time we've been on this fiat system. It's only 45 years old. And financial systems don't last forever. They have, I think, a 45, 50-year-old time span anyway. So it makes sense that now we should be entering into a new era with a new kind of financial system. If you go back in history, every 45 years or so, there was a different kind. Well, here we now have another sort. And we know all things don't last forever, and there certainly seem to be a lot of positive attributes in the Bitcoin case, and a lot of negative aspects in the way things are currently. And this is what's driving people. But let's move on. So now, by every metric, by the way, and I showed you some of the positive things about Bitcoin, but if you measure Bitcoin by any metric, by the wallet users, in other words, people who are now starting to download Bitcoin wallets and starting to get Bitcoins, or the number of transactions. This is just transactions on one, this is the Bitcoin transactions. You can see that by every one of these metrics, and this is basically what's called a hash rate, meaning just the processing power of the decentralized network. All those computers processing those transactions. That's the chart showing you how many people are contributing resources to this and how secure this network is becoming. The higher that chart, the more secure. So by every single metric we can look at, we can see that Bitcoin is not fading. It's growing. And the question that you must ask yourself now is, how much should I invest into Bitcoin? If you had seen that other chart, of course it's volatile, and I'm going to look at the volatility now, and I'm going to explain it away. Okay, so this is now, I mean, I got into Bitcoin way before even this chart begins, so I've definitely seen these bubbles time and time again. I mean, I'm used to this, how this works. But there's a lot of reasons for this. You know, in any sort of new idea, any new technology specifically, you know, this kind of uncertainty is always there. You know, people aren't sure if this thing is going to be legit, if it's real, if it's going to be legal. Because the market cap is so small, about $17 billion, you know, very few people actually own Bitcoin right now, a couple million people maybe on the planet. It's quite easy if you want to, you know, if you have 1,000 Bitcoins, some people, early adopters do, and you maybe get tired of holding Bitcoin and you want to cash out. If you dump all those Bitcoins on the market, you're going to make, this price is definitely going to, you know, be affected by it. So having a very small, a very shallow kind of market, it's very easy for this price to go up and down in times of uncertainty and in times of exuberance. You know, every time there's a news from China that they're banning Bitcoin, or Russia, or whatever it is, the price tanks. And whenever you hear about a new retailer or a new company or new whatever accepting Bitcoin, suddenly the price goes up, because, you know, the price is the free market, and it's quite easy, you know, in the shallow market, in the small market cap, for that price to go up and down. But more than that, this picture looks exactly like every single other picture when evaluating something new, some kind of technology. And we've heard about the Gartner hype cycle, and I'm going to show you the Gartner hype cycle. I'm sure you even can see it now in there. But I don't know if you can see it. It's very faint, but there's a red line against that. That's the NASDAQ. Remember that dot-com boom and crash back in 2000? Well, you can't see it now, but it pretty much mirrors that Bitcoin price exactly. Gartner says that every time you have a new tech, it's going to follow a pattern. There's going to be what's called a technology trigger, where things get started. We're going to reach the peak of inflated expectations, and then suddenly reality kicks in, and the world realizes they're not ready for it, and there's the plunge into the trough of disillusionment, and then slowly we climb up the slope of enlightenment to reach the plateau of productivity. It's a little bit more complicated than that, but those are the main major points there. So Bitcoin, by every metric, is looking positive. Plus, it follows the Gartner hype cycle exactly, according to every other technology that has ever come before it. So, if anything, Bitcoin is following the rules exactly. Now, blockchain, I feel, is right at the top of that curve. I think Bitcoin is much further along. You know, I think right now we are going to be seeing. I mean, of course, in the short term, there's going to be volatility. But I think and this, by the way, this chart is actually old. I mean, it's almost reached its all-time highs. And I think now we're going to see a slow and steady rise in the price. I think more merchants are going to be adopting it. More people are going to be looking to invest in it, as well as things like gold and silver. But Bitcoin is way more convenient and simple to use. Because it's got a built-in transaction mechanism, you know, a built-in medium way of exchanging it. Gold doesn't have that, you know. So I think we're going to see this trend keep going. And I think, not to be one who'd ever give investment advice, I'm definitely the wrong person, but I think that Bitcoin is here to stay, and it is only going to grow, and it's going to become stronger, and it will be a way that you can protect yourself from what I and others are expecting to happen, which is what has happened throughout history, where the status quo becomes fragile, and then eventually everyone loses faith and confidence, and that's essentially what gives it value in the first place. And I think we're going to move into this new paradigm. Now, I'm not going to say to you guys that you must give up everything, and you must lose faith completely in the system. And from a regulatory point of view, I'm working with regulators and working with the Reserve Bank, because I want to have this come along in a legitimate way. I don't want there to be cowboys out there who are now suddenly money laundering and doing all that stuff. Although this is all possible, I know that this is unstoppable. But I would love to be able to ease it into the world and make sure that at least whoever's in control, and at this stage we have our government and our Reserve Bank, that they at least can have some measure of control about what's going on. And the only way that they can do that is by regulating the businesses like mine that are allowing people to use this. And I think that's the right approach. Now, as Treasury, again, I said that earlier today in the blockchain talk, but if this really is money, and if people are going to want to be paid in Bitcoin, and people are going to want to spend in Bitcoin, well, then maybe you need a new column now in your spreadsheets that instead of having rands, it has Bitcoins, or whatever it is, maybe figuring out how to build that into your systems. Because we see how, I think it's Sage, or one of those companies are now allowing have Bitcoin integration into them. So you can see now it's going to become part of your world, and one day you're going to have to have your books. There's going to be Bitcoin in there somewhere. At least I think so. Okay, so that's pretty much my sales pitch, if you like, on Bitcoin. Not that I'm gonna, if you buy Bitcoin, I'm not gonna benefit, or it's not my business, but I do see the value in it, and I do think that it's a prudent move on your part. Given all that other stuff, and I think what I'll do is I'll end there. And again, if there are any questions or anything like that, feel free to ask. Yes, sir, right at the back.
Okay, thanks. So as Bitcoin gains acceptance, what are the possibilities for other cryptocurrencies to come into the market? Or are there other cryptocurrencies? And what's to say we wouldn't experience the same issues in that kind of scenarios? And what are the barriers to entry, perhaps, if there are any?
Okay, so other cryptocurrencies there are, because Bitcoin is what's called open source, so anybody can create their own currency, and we see that there are lots of them out there, because again, this is just an idea that can be copied. But I think that Bitcoin is different. Bitcoin is less like MySpace, what MySpace was to Facebook, and more like what TCP/IP was to the internet. If you remember back in the 90s, anybody remember, there were things like Prodigy and CompuServe and AOL, and they all were trying to create their own little internets. And what happened was this big public protocol that everybody started using, TCP/IP, became mainstream. And the more people used it, the more valuable it became. And now it's kind of embedded in our lives. I mean, all networks now operate over TCP/IP. And I think that Bitcoin is the same, because Bitcoin is a much greater network effect. More and more people are using it, and it's going to become and as it becomes embedded in systems and apps and software and all that, it's going to be difficult to change it. And if everyone is using it, then it becomes the most valuable network. That's not to say that another coin might not come along and say, look, we have different features and we work better. It might very well be. I'm not 100% tied to Bitcoin. I just think that right now Bitcoin is the only one I'd consider. And also, being the most widespread makes it the most secure and also impervious to change. A lot of these coins that are being created now only have a couple people who are running the network, and it's very easy for them to collude and make dodgy things happen. Also, a lot of the times people start a new currency, they keep a lot for themselves, and then they say, okay, I've created a new coin, but secretly I've got millions, and then they start playing the markets, and then speculators make the price go up, and then they dump. It's called a pump and dump, and you see that often with coins. So, I mean, if a new coin comes along, I'm happy to entertain it. But right now, I think Bitcoin is the only one I'd certainly consider. And then the barriers to entry. There are no barriers to entry. If you've got a mobile device, you can download an app right now. All of you could do right now, and suddenly you now have access. You can now earn bitcoins. You can spend bitcoins. There's zero barrier to entry, and you don't need to register. All these apps, most of the apps don't have an account that you need to create. It's just a digital wallet. And then the middle question was, I don't understand it. Something about. Sorry, I didn't make sense with the context.
Yeah, I think I was just wanting to explore the effects of other currencies coming in and whether or not that would or could lead to the issues we have with fiat currencies at the moment. If there's,
Well, those currencies, by definition, if they're a blockchain currency, are not issued by anybody. They are a natural byproduct of the network functioning, like Bitcoin. So nobody issues Bitcoin. Bitcoin, once upon a time, there was zero. Actually, they started with 50. But what happened was as the transactions got processed, every time that block of transactions was processed, brand new Bitcoins got created through the rules. Now, those rules are fixed. And so there's a very clear chart of supply that you can calculate, and you can see how that's going to work out, and nobody can manipulate that supply. So it's very predictable, it's finite, and there's no central body or entity who can now go and change those rules. So it's like gold. We don't know how much gold there is on the planet, but we know there's a fixed supply, and we know that eventually we'll reach the limit of that supply.
Great, thanks.
So this almost ties in with what you were just saying now. So you've spoken about hyperinflation and co-printing of money and how Bitcoin has its upper limits to the number of existing Bitcoins. So, but I don't understand, what is the physical basis for this upper limit? Because I mean, we can also take gold from asteroids, for example. So is this really an upper limit for the number of Bitcoin? Is this really a intrinsic part of the system, or what's the basis?
Yes, that's a good point. Gold might not be finite in supply if we manage to mine asteroids, or if we manage, also the supply there could be an enormous amount of gold we just suddenly find at the bottom of the ocean or something, which could disrupt market value. But Bitcoin, being a software, it means that the rules are like mathematical, and it's impossible for that rate of supply to change, and it will eventually reach zero new Bitcoins coming into the system. And you cannot change that. It's hard coded into the system itself. Now, you could decide not to use that system and use another type of currency that has a different rate of supply, or maybe it has infinite supply. There's another blockchain called Ethereum, and right now that's the sort of number 2 blockchain currency. The currency is Ether. There is no fixed supply for Ether. So it depends, again, if you want to now use the Bitcoin system, well, at least you can be confident that the supply is fixed and predictable. Yep.
Hi, so I agree Bitcoin can be an investment. I don't particularly agree that it's a hedge. Essentially, a hedge takes away my risk. All I'm doing now is switching my risk from one currency to another currency. So if you're an organization wanting to move a lot of money from one point to another, yes, it will facilitate that, but I still have a risk. So why don't we see a secondary derivative market in Bitcoin yet? For instance, future market optionality, and is that coming?
Yeah, I think so. I mean, we see those kinds of products now being imagined, the ETFs and the investment trusts, and I'm quite sure that maybe somebody will start, creating some kind of product like that. I think that the problem is, though, especially from an institutional point of view, is that regulation is grey around Bitcoin. A lot of companies and businesses are reluctant to engage in Bitcoin because it has a kind of bad image, and also because there's no clarity on what it is. Even the reserve banks, our reserve bank, can't really define Bitcoin as money, which means that if I am a Bitcoin business and I take your Bitcoin, I'm not receiving a deposit. I don't have any obligations, that sort of obligation. So right now, because of that ambiguity, I think there's going to be a time before large organizations or people who want to offer those sorts of products decide to actually dive in and do that. I think that's a matter of time while we're living in this grey zone, this uncertainty. But now, hedges of course are never sure things. I mean, all hedges have risk, but it's just your risk appetite. You want to shift risk into one asset, and you want to balance your risk out. Now, of course, Bitcoin, when I say it's a hedge, I think when I say it's a hedge, I think it balances out the uncertainty in one respect, but of course it creates uncertainty in the other. But I think that the two hopefully will complement each other and reach equilibrium. Yeah.
Fascinating topic. Can I ask a dumb question, and then one which I think is maybe a bit more intelligent? So the dumb question is, I've got £1 in my pocket. Can I buy 1/14,000 of a Bitcoin?
You can.
Great, thank you. So the second thing is, I'm just trying to kind of apply this from a practical, how does this apply in Africa? And I can see challenges and opportunity in equal measure. So I work in the banking industry. We work a lot with aid, humanitarian that sort of thing. And the challenge they have is getting value into the hands of the people that need it for them to buy goods and services. So I'm trying to think, okay, so we put Bitcoin into the process. How do you set up an infrastructure to support those in need for a sustainable kind of improvement in their life around a Bitcoin merchanting thing? And I suppose it's a bit like M-Pesa. So you go back 10, 15 years, that's the challenge that M-Pesa had. There's a great loading value onto something other than your physical wallet, but they had no means to spend it. And I think that this in Africa is the challenge we have. So we've come a long way as a continent in terms of the mobile wallet and that kind of cashless type of thing. But I'm just a bit curious in terms of where you see this may go in a kind of Bitcoin practical application.
Well, I'm glad that you mentioned the aid type thing, because I'm actually involved with that very thing. UNICEF have taken interest in a project of mine where you can now fund schools' energy directly by sending Bitcoin directly to the meter. And so there it's a perfect use case, because donors can be confident that the money is going directly to that thing, because the payment is auditable on the blockchain, it's transparent, and it went directly to the energy. It didn't go to some organization that then took fees and diverted the cash. And so a very important aspect about Bitcoin is that you can be confident that if somebody has an address, which is that Bitcoin account, that the money will get to them, and that's all that's required on their part. But of course, again, then we have a chicken and an egg problem. If people have Bitcoin, how do they do it if they're talking about your M-Pesa? And that's what needs to happen. Bitcoin is not going... If everybody used Bitcoin tomorrow, we'd have a huge problem. First of all, it wouldn't scale. It wouldn't reach that. But also, what do you do with it? You can't pay your rent. You can't buy petrol at the petrol pump. So there has to be some time, and I think it will, again, be years before Bitcoin becomes usable for the mainstream. The same way the internet slowly became usable to everybody else. But it definitely opens up incredible opportunities in terms of direct funding for things, and ensuring that money can go directly to a recipient instead of being diverted or going to some organization that then opaquely distributes the funds. So I'm very interested in that notion, and if you ever want to hear about that project of mine, I'm been fortunate enough, and I'll boast a little bit, but I'll be speaking at TEDx in Switzerland in April about that very thing, how Bitcoin can help with donor funding, where donors can now be confident that the money that they're sending is going directly to the cause they believe in at low cost, without going via some intermediary. See, Swift is one of the...
I had a question regarding the retail payments use case that you mentioned, because I want to understand what is the problem exactly that Bitcoin is solving, because today I'm very happy with the process when I go to contract eat fried chicken or to my supermarket, and I take out my credit card, debit card, or even I can take my iPhone and tap it, and it's real time. But I understand that the chains of the blockchain, it takes up to 10 minutes until it's processed and the transaction has been confirmed. So I'm wondering, what is your point of view of me waiting 10 minutes to the cashier until my Bitcoin transaction is confirmed?
Okay, so the first thing is that the payment systems that we have today, like your tap to pay or your credit card, are more efficient and cheaper and easier to use if you have access to that system, and if you are confident that that system is going to be the one that maintains for a long time. So what Bitcoin is doing right now is it's saying, yes, for someone like you, what we have now is an alternative if you want to use it for any of the reasons that I specified. Now, people who don't have iPhone tap to pay or whatever, people who only work in a cash economy, don't have bank accounts, they don't have access to what you've got. So what we're doing is we're saying Bitcoin can provide an option for somebody who doesn't have access to all those great things that you've just described. Now, in terms of the payment and the 10 minutes, now, have you ever been to a retail store where you've swiped your card, it's checked your PIN, but it hasn't authorized the payment in the back end? It lets you go through immediately. That's because that retailer said, at a threshold, I'm going to allow payments to be immediately authorized without me having to go back. Now, Bitcoin can be exactly the same thing, and my merchants are exactly the same way, where at the threshold, I detect the payment on the Bitcoin network. It's not confirmed in the block, but I'm going to take the risk that that low value transaction for 50 Rand, 100 Rand is ultimately going to be confirmed, and I can allow the customer and the merchant to be notified that yes, the payment's been made and can release the goods. So I'm taking that risk on myself, and I'm saying I'm happy for that to happen up to a threshold. If somebody wants to buy a Ferrari from me and they're going to pay $1 million, well, I'm going to make them sit and wait for an hour before I release the car. So I think those types of solutions are going to happen. But again, just remember, Bitcoin isn't something that's saying, look, the system we have now sucks. It's saying, look, now we have an alternative. And perhaps one day that alternative will be competitive with the way things are currently. Maybe it will be more efficient. Maybe it will be cheaper. But at least it's an option for those people who either want out or just don't have access to the system in the first place. Okay, thank you very much.
Thank you very much, Lorien. Panelists, could I ask them to come up?
I was going to start off by suggesting that right about now, somebody was standing up and talk to an audience about chances are, however, a couple of
Anybody want a presentation? Can I send it to them?
Of course.
Okay.
Yeah, sure.
I'll change it to PDF.
Yes.
And then
Yes, I can do that. Hey, you're welcome. You're welcome.
You got me buying Bitcoin as we speak.
Oh, brilliant. Job well done. Thank you.
Okay, if I can.
Yes,
Okay.
I'll create a PDF and send it over.
Will you do that? Okay.
Yes, of course. Thanks, Artemis. Thanks.
Thank you. Okay, cheers.
Thanks for everything.
No,
Bye-bye.
please, thank you.